Good morning, everyone. Oh, is this just another one of those 1,000 point gap openings or something different this time? I don't remember in the past having 1,000 point ups and downs each day. Pretty wild times. Interesting though, right? Great times to be learning. Right? Tanya had mentioned, brought up what I had said in the room, or I think it was an empty live on Wednesday about, following the rules comes with pain, going through the painful process of adhering to a plan. And, unfortunately, it's not with human nature to be so restrictive in what we do on a day-to-day basis. And we're not kind of built for being, traders following these kind of rules. And, especially when our money's involved, and it can be difficult, but the pain will bring you to your knees and humble you a bit. And eventually from that move lower, you start to rebuild. It's just part of the process that the majority of us go through. So, if you've experienced some unpleasant things, losses here in this market, hopefully you get through it, make some notes into your journal as to what you've learned, some of the mistakes that you've made, and not to repeat them again. And while that seems kind of crazy, why would I repeat such stupid things again? In my own belief is that it's human nature to just not want to follow. I mean, why do people fall into addictions of whatever it might be, and after such pain continue to do the same thing? So something has to click in that complicated brain that gets you to following rules. And even though the good side of it is, if I follow my rules, I make money the majority of the time and my losses are relatively small. It's a struggle. It's a struggle to get yourself to do it. Anyway, let's get going here. And is the market limit up at this point? I see my futures are flatlining here, going sideways. So pretty interesting, interesting changes. One of the comments that I made yesterday, while, things did fall further overnight, and then that crazy whip up and down, at the open, one of my comments in the room last night was, hey, you know what? These ticks have been pounding the bottom at minus 1,000 for an hour, and the market won't go down. Is this a sign of exhaustion? And in retrospect, maybe it is. But as we look at this futures chart this morning, it's not quite halfway in. The depth of retracement not quite halfway into this big red bar, but it's a hell of a good start to being a low. Getting down to 2,400 last night, which was a targeted area, and being down in the area of 30% from the February high, it just makes sense to have a technical bounce. Whether this is the bottom, it's probably a short-term bottom. We don't have a pattern here for the bottom. In retrospect, we could look back on this and say, yeah, that was the bottom. But maybe a retest pattern, which would be great. Some kind of sideways price action. It's a big drop in a short amount of time. And looking at the hourly here, you see the retracement just, it went into resistance. So still in a downtrend, but our retracement concept tells us, hey, the depth of retracement here from this high point, and this is real here, but from this point here down to low, and an igniting wide range bar is supportive of thinking that at least a short-term bottom is in place, and maybe either sideways price action, which would be bullish, or maybe a higher low. We've talked about here in the room where counter trend trades, I like to have several bars chopping around in the higher time frame, because it creates a base of support in the lower and moves prices away from the real fear and the overhanging supply that's directly there. So when the supply is directly overhead and it runs into it, there's a high probability of a pullback from there. Whereas if you get a several days of sideways price action and you get to move away from that, the buying and selling helps to move prices away from further areas of supply or resistance. But the real understanding of that is that traders that were either buying or just holding, sitting through the pain, all the little dips from the deep retracement in their minds are, here's the next giant wave to the downside that's going to take all of my money that's left. And sometimes that happens. Right? Well, it depends on where you got in. But the point being, even the dips down that are potentially going to make the higher low, their perception is that that's the next giant wave to the downside that's going to take them out. And through those pullbacks, this overhead supply, that resistance gets dissipated to a certain point where we look to the left in a downtrend for a counter trend rally, those reference points become weaker or less powerful as a point of stopping. So, and that is the essence of, a bottoming pattern, is that over time, those reference points to the left become less powerful and the ability to get through them become greater. So sometimes we do trades where you say, well, what about that level over there to the left? And you'll hear me say here in the room, well, I believe it's going to go through it because of such and such. And that's one of the reasons where prices go sideways over time and why we make assumptions that at a certain point resistance could be taken out. Okay, let's look at the others. Again, we're getting very similar patterns across markets. Right? There's the dip, wide range bar, move into resistance. Now things are going sideways and they'll try and get through these levels or higher lows. And we'll go through the process here of trying to, put in a bottoming process. Again, straight down. It couldn't bounce much. It just bounced up into the resistance. We covered that at the time. Down it went, can't bounce. What Dan calls a bull sandwich. Two big red bars with a big green bar between, and down it went. And now we start to try and put in the bottom again. YM, same story. Definitely weaker. Not that deep into the big red bar, but you can see where it is here, down 30%. It actually violated the 2018 low there. Just an incredible move in a short amount of time. So same story. We'll just see how it all plays out. Some sideways price action. Today is Friday. Right? I kind of lose track of these days. They're wild. But today's Friday. Maybe a quiet day of chopping around here. We'll see. Who knows what today's going to bring? But where prices have moved so far, so fast, got within striking distance of 20,000 from up here, where it seemed almost like as a given that it was going to hit 30,000. One of the things that we spoke about here in the room was the fact that when it didn't continue higher, I said, you know what? That could be a trouble sign. We were looking at the crazy sentiment readings, and I said, this kind of a pattern of a base, a resting period, a green bar, and a bottoming tail bar, that's supposed to push higher. And when it didn't, it just kind of said, hey, this market's tired. And then we all know the news that followed and such. All right. Anyway, those of you, if you didn't get a chance to read last night's chart of the week, you should. I sent it out last night and, suggesting that maybe this bottom was in place. And, then I was like, I wrote that. And later on, I say, oh, futures are down another 500-600 points. I'm like, all right, well, let's see what happens in the morning. And wide range bar ending the move. Sure. I mean, Tony, look, it's the biggest giant bar amongst the giants here. Let's looking at the way down, right? Big stabilization, igniting, because it came from a consolidation, continuation pattern, giant bar, into, a huge 30% down near 20,000. Our market internals, if I can pick the right one, there we go. 1.4. That's wild. Right down here at a minus 400. I don't know. I don't know if I've ever seen a minus 392 on breath. I know I've seen minus 350, but minus 392. So talk about an extreme, and the wrong way option traders just betting on the end of the world and a wide range bar. I mean, I was looking at that last night and I'm saying the bottom has got to be within striking distance here, a day or two or what have you. And, I would have much preferred, as I think probably all of us, give me that gap down to 20,000 and some, bottoming action. And now here we are up at resistance, and, futures locked. We'll see what all happens here. Russell just decimated, down around 35%. We have to go to the ETF to really, see what's to the left there, which is, just cleared that low. So, and just a vertical move to the downside. It's just incredible what's happened here. When you think about it, the implications of this, they're obviously not going to turn on a dime, but, so many things being shut down, quarantine, no baseball, no basketball, this big music festival down here in Miami getting shut down, countries being said, hey, you don't go out unless you need to eat and go get some food. It's just wild. You just expect, I said a couple of weeks ago, I mean, where are all the dead bodies in the streets? But, anyway, it's crazy times. And, I've seen a lot in my years doing this, and now this is, I mean, you put all of this in your, that extremely valuable thing called experience. The knowledge that you get in a seminar is fantastic, but putting that to work in the real market and real life, no matter what it is that you do and learn, that's where the real, power and, advantage comes from. Knowing that putting that knowledge to work is the true value, because other than that, it is just superficial. You know it, but you don't really know it till you live it. Right? You have to live it. And as an intraday trader, you just have to live those wiggles that just kind of make you crazy, but you learn to, hey, follow the rules. The higher time frame is on my side, and these algorithms that are doing these crazy moves and such. It's just part of life as a trader in today's day and age. All right, let's get going here. So what's the key outcome of all this knowledge, Greg? The key outcome is obviously where you started, day one. How do I make money in the market? How do I do it consistently so I can have confidence in my method and what I do on a day-to-day basis? And knowing that I won't press the button, and you will sometimes, as long as you do, but 99% of the time, I will not press the button on impulse trades just because, oh, things are moving. Let me jump on board here versus, my plan of when these things line up, that's when I take a trade that has a high probability, right? Preservation of capital, what Kevin is saying. It's like, hey, maybe it'll turn around. We don't live for maybes. We live for keeping our account, right? And not getting crushed. So let me get going so Dan can review. Oil's up here, right? A little bit, no big deal. Just been crushed like everything else. Bonds, right? The big dip as the market started to rally. And one of the signs yesterday, the other side of it was like bonds were coming down, and the market was just sitting there, and the ticks, I said, those of you in the room, you heard me. I said, bonds are coming down here. The market should be going up. They weren't. They were sitting, and the ticks were just pounding that minus 1,000 level. And you know, it was just got kind of confusing where the disconnects were happening. That was one of my comments, was like, maybe this disconnect is what's suggesting that we're close to a low here. And so, well, we've got a low here for the moment. We'll see how it all plays out, you know, today and then into next week. Gold, you know, traders coming out of gold. I mean, if you think about gold and, you know, as far as inflation, then obviously there's not going to be any inflation with businesses shutting down. And you know, I was talking to a neighbor as I walked the dog this morning, going out, and our son's a chiropractor. And I said, how's it going there? You know, people showing up and whatever. She goes, no. She says, no, they're not. And she says, you know, some are, but I can't even get supplies, you know? So it's just real life. You go and talk to neighbors, and you can hear the things that are happening, that we see about in the news. And, you know, here's the chiropractor office cannot get supplies, and people are not coming in because they're afraid of getting this virus. So interesting time. Silver breaking down here. It looks like it's heading down to 14 bucks. You know, it's been down there several times in the past, but we'll see if it holds that level. Transports have just been decimated. You know, there's your wide range bar, Tony. And so possible, you know, indications of a low, not quite down to that support yet, but got pretty darn close to that swing low right there. So things starting to line up here. We looked at the Russell, you know, the Qs down here, right? Looking over to the left where the lows are. Broke through those. The next ones, thank goodness we're not far away. And, you know, 188. So you always look at your gap, where prices are, 187, 188. Where's it gapping to? Cleared some resistance, but again, as we looked at the futures, right into that resistance area right there. And spiders, and same story, right? You know, they're still trading there, 282.50, 262.50, I should say. So pretty nice gap and start to the day, a gap up from a big bar closing at the low after a giant gap down. That's about a 7% gap on big volume, lots of technical signs, our market internals, so on and so forth that we've spoken about to suggest, hey, this is the area. Yeah, so as John's saying, V bottoms are rare. When we've seen that, right, in the past, I forget what year it was. I think it was the spiders that made the V bottom, but the Qs had the retest. So we got it all, you know, the history, the knowledge, the patterns, the internals. We know that we're in an area here. It doesn't mean, you know, at a point it doesn't go lower, but as short-term active traders, we look for, you know, reliable tradable lows, and it looks like that's what we have here. All right, same story there in the Dow, you know, hitting close to that 30% level, and lots of green down here all over the place, and airlines and so on. So that's it from me. All yours, Dan.
Good morning. Now, let's look at opens here. I think we dodged a bullet here. We had yesterday on this breakout here with the announcement of whatever Fed QE. We sold an out of the money put spread, and I just didn't want to get stopped out by a penny or so. See, it's just, you know, this just had the feel of it was going to blip, hit our stop, and then go right back up. So I said, let's move the stop to the 30-minute low today. And I'm in the trade, and I got to tell you, I was very nervous because the candlesticks look like heck. It looked like it wants to go down to, you know, 235, 240 on the weekly chart. But it, you know, and then watching Greg's video, excellent timing on that, of the cooked internals. And, you know, Greg said, he said, I don't know the reason. Who knows? You know, we'll find out after, but make sure look like a gap up. So we have put spreads on spiders and Qs that expired today. So those look great. Zoom, we have a put spread today. We have a couple naked puts in, not RCL, in Hilton. Now, I got an email yesterday. We're short the 75s and the 70s for next week. And somebody asked me, hey, Dan, should we roll these to next week? And I said, and I analyzed everything for them, obviously. I said, look, you can. I mean, they don't have weekly, so you would have to roll it out a whole month further. And it would be for a credit, of course. But I said, I'm going to stick with it because if it expires above 75 next week, we got full profit. And then we don't have to mess around with it for another month. But you would still be giving up the remaining very, very high time premium between now and next Friday. I only like to roll when, either an offensive or defensive roll that we teach in the courses. And this would have been a defensive roll. He was trying to get more time, more cushion, further out of the money. So I totally understand it. But, I gave him the reasons there. And so we have NCLH naked puts, and this thing's just been in a free fall. This was a measured move right here. It exceeded the measured move, but it's still a climactic buy setup. Travel industry here. Cruise ships have just gotten beaten up. I don't like the CCL pattern because of the sideways here, but I like NCLH. Maybe and the premiums, even with the gap ups, are going to still be very jacked in this sector. So we have Hilton, Marriott. That's still a mess. Wyndham, Hyatt, IAC. And I'm not going to rush into them, but I'll still be watching them very closely. Airlines also. This chart looked lower. It's trying to bottom, top and tail, closing at the low. It's gapping up though, but not a great pattern, except this is Friday, 0 DTE. So I will definitely be on the lookout for zero DTE trades today, including RCL. I'm in this mess. I've got a short strangle out of money calls and puts. And I'm personally in LUV. It looks like heck, but I'm short, some out of the money, 36, 37, 38, 39s that expired today, but I don't like that pattern at all. Delta, well, I don't like that pattern. If I do anything with these are just going to be 0 DTEs, not sevens, not unless I have a much better pattern. UAL, just horrible days yesterday. JetBlue, horrible. They could, be day trade longs here. They're gapping up with price void. What else? Reinhard Air. They're all a mess. ALK. Messy. So that's it on opens. Or actually, we have one more, Microsoft. Alex, yeah, CCL announced that yesterday. And I read in the journal today, Alex, that CCL has the worst track record of gastroviruses of any cruise ship on that Princess line. Is what it is. I don't know why. Let's look at some gappers now. La Jolla Pharmaceutical, gapping up $5. No great pattern. Yeah, I agree, John. I'm an avid cruiser, and I won't cruise on that junk. Remember, like 2 years ago, they were floating around in the Caribbean and Mexico with no working bathrooms. Remember that? That was CCL. And I think they had to fly food in by a helicopter or something. But yeah, I don't like them either. All right, Disney here. Disney, Now Kramer was talking about this, and I agree with Kramer many times, even though he's not a great technician. But he's like, hey, I was waiting for the parts to close, and now I think it's a buy. So I like that contrarian view. The paper said Disney's closing Paris and California and Florida, and gapping up to $100. That's a Bull Island reversal. And with the volatility that's jacked, talking about volatility, we have a call spread on VXX, and I'm, we'll see if we're going to get a pullback in the market here, whatever. But once we get the green light for a continuation in a bullish position in the broader markets, then I will be looking to short the VXX, the underlying. John, I like Norwegian. I like Celebrity. Norwegian is Celebrity. For the unless you're gonna pay 10, 15 grand. Says things gapping down. Zuo. Daku earnings up 79. Whoa, that's a big gap. That's a big island, bullish island reversal. Virgin Cruise Line. Yeah, that's Branson's, right? I heard they were putting that on hold. Oracle 4450, another Bull Island reversal. I mean, I think we're gonna, once things set up here, I think this is gonna be a fantastic put selling environment again, unless like yesterday after the lunchtime pop gave a greater than 100% retracement. So as long as we get a bullish retracement in today's gap up, I have a total mindset of, excuse me, selling expensive put spreads and or starting to nibble on any quality stock, whatever the heck that means, that you like. Greg, another interesting timing of your video last night. There was some option newsletter I get. Their trade today was Spiders bearish. They wanted to buy a bear put debit spread. So many people don't understand the power of those internals. Let's see, Adobe 312, big old gap, no pattern. This is a mess, you're gone. Yeah, his launch. This is coming in. Garbage, penny stock, Zoom Z up 10%, 2040. I mean, this still swing trades are not going to be easy here. Tilius, GPS 1071. I don't know, unless something looks good. That's just steady grinding downtrend. Alta Bull Island reversal. Any Bull Island reversal is a put spread candidate if you go through your checklist.